the discussion which we are going to have today will help you maximize the profit from your view. Okay. Suppose you are having a view that market is going to up, market is going to down, whatever view you are having, and if the market behaves according to your view, in that case, how you will be making the maximum amount of money. And suppose you are not right with the direction, in that case, how to minimize your losses. Okay, all those things, the small nitty-gritties of option buying will be discussed today. And the main factor which determines the money you will be getting out of your view are the Greeks. Okay, Greeks are the thing which decide the pricing of options. So because of them only, different option of different strikes behave differently. Okay, not all options are like going up in a similar fashion when the market is going up. Not all call options are going up in a similar fashion. Similarly, if market is going down, so not all put options are increasing in a similar fashion. There is a discrepancy in all those things. So that we are going to discuss today. After today's discussion, you won't be facing any kind of problem in future in deciding the option prices. Okay, I'll be discussing them thoroughly. So the thing is, option Greeks, they are basically like whenever any option is priced. Okay, so there are different factors behind them. A proper formula is there. There are so many formulas, but this one, the Black-Scholes formula, this is the best one, and this is followed by many. And this is the ideal convention actually. So this formula, we don't have to know the formula. Okay, we just have to understand that there is some formula which calculates the Greeks. Okay, so we have to like learn about the Greeks only, and they decide the premium option. What is premium? Premium is the price you pay while buying an option, or if you're selling an option, so what is the credit you are getting? That is the premium. Okay, so there are four kind of Greeks which are most important for us. Actually, there are 10, approximately 10 type of Greeks, but we have to learn about these four only. Once you get the understanding about these four, everything will be easy and you will be able to deal with the options very easily. So first one is delta. Delta measures the rate of change of option premium based on the directional movement of the underlying. Okay, you don't have to go with the detail right now, because we will be discussing them in detail in the coming slides. But understand one thing is delta is related to the direction. Okay. Then we have gamma. So gamma is the rate of change of delta itself. Okay. So delta is delta is related with the direction. Gamma is related with delta itself. Okay. Then we have Vega. Vega is the rate of change of premium based on the change in volatility. Okay. Understand this. All these things we'll be discussing later on, but understand that Vega is related with volatility. What is volatility? How it is calculated, and what are the factors? All those things I'll be discussing in a while. But understand that V for Vega, V for volatility. So Vega is related with volatility. Then we have theta. Okay, so theta is something like theta is most like almost everybody knows about theta. Okay, so theta is something that measures the impact on premium based on the time left for expiring. So theta is correlated with the time factor. Okay, T for theta, T for time, D for direction, D for delta. So all these things are easy to understand. Okay, now let's see this. So this is the slide. Like this actually is an option chain. Okay, option chain available from iCharts. So iCharts is a website. I just recently made a thread on this site, and there is a like coupon code also, which I'll share with you all. So here you can see this site, this website is very useful for option traders, especially for me. This is very useful. I use it almost daily. So here you can see this is the option chain in iCharts, and this is the option chain from Cnceptual. Okay, Cnceptual is practically free nowadays because they are giving it free for Zerodha users. So Cnceptual is also free for us. You can use anyone. This is paid one and this is free. You can use anyone. So the idea is to understand this. So this is basically an option chain where all the different options are stacked together. Okay, we have this is a proper convention that you have to put call options on the left side and put options on the right side. Okay, and this is in increasing order. You can see this is in increasing order. A lot of you already know about this. So this is in increasing order, and this particular strike, which is near to the like near to the underlying price, is called ATM. Okay, at the money, and below these calls are called in the money, and above the ATM calls are called OTM. Similarly, for put, the below strikes puts are called OTM, and above the strikes, above the ATM strikes are called in the money. So that's a different convention, and we'll be discussing that later on. So understand that key in this option chain, there are few values available. Okay, these are the Greeks. We have information of Vega, Theta, Gamma, Delta in front of us in this option chain. There is Y also. Y is a topic for different days discussion. So that we'll discuss later on someday. But today we are discussing these Greeks. Similarly, here also we have the values Gamma, Vega, Theta, Delta. So what I would like to tell you ki for the sake of discussion, we'll be seeing these values in the coming slide, but you don't have to remember that or even see them. Okay, understand the discussion, because once you understand the discussion ki how the Greeks behave and how they impact the premium, after that you will be able to think about them by yourself and manage your trade accordingly. You don't have to see the Greeks in real time. Okay, they are not like the actual number is not needed, but the impact of that Greek on the premium of that option and on your trade is needed. है ना? You have to understand what the impact it will be making, and based on that, you have to modify your trade accordingly. And so the delta is the let's discuss all the Greeks one by one. So first one is delta. Delta is something that gives you the answer to the question, like by how many points will the option premium change for every 1 point change in the underlying. Okay. So suppose you are trading Nifty and you are buying call of Nifty. Okay. So let's say Nifty is trading at 21,000. Okay. And from here, Nifty goes to 21,100. So in this 100 point change of Nifty, whatever option you are holding, there are different strike. You can hold option of any strike. So whatever option you are holding of any strike, how the price of that option will change, by how much point the value of that particular option will increase, that will be decided by the delta. Okay. The rest of the Greeks are not if the rest of the Greeks are not involved, and the whatever maybe the delta value, that will tell you like how the that particular options value will change. Okay. So here you can see the delta is a number which varies between 0 to 1 for a call option, and 0 and -1 for a put option. Obviously, minus sign is here because you can see in the case of call option, if the premium increase, if the underlying increases, underlying means the thing like the index or the stock based on which the option is there. है ना? If you are trading any stock option, then that stock is the underlying. If you are trading an index option, then that index is called underlying. है ना? That's simple. So you understand that key, this is the underlying, and if the underlying changes, then let's say underlying increases in value, the Nifty particularly increases here. So in that case, the call option will increase in value, and similarly put option will decrease in the value. Okay, so the call option has direct correlation with the underlying, but put option has inverse correlation. So that's why we have the minus sign here. You can see in this chain also, we have the delta of a put option. These are the puts in the right side. So we have the delta of put options in minus sign, and then we have the delta of call options. They are in positive sign. Okay. Now let's understand that key, the thing which I discussed with you while discussing this chart, the concept of ATM, OTM in the money. So that is very that gets divided based on the delta gets divided based on the moneyness also. Okay, we have different delta for different kind of options. Okay, so the ATM options, they have delta approximately around 0.5. Okay, plus 0.5 for the call option and minus 0.5 for put options. Okay, you can see ATM options have a delta of approximately 0.5. That means keep by like if the 10-point increase is there in the underlying, then your particular ATM option will increase by 5. Okay. And similarly, we have other options. So we have in the money options. In the money option, the delta gets increased, point 0.6 to point plus 0.1, and deep in the money approximately around 1 only. Okay. So in the money options have 0.6 to 1, deep in the money around 1. Okay. Similarly, OTM options, they have delta, like the delta value gets decreased as you get far from the ATM. So OTM options have a delta close to 0, and in the money options have delta close to 1. Okay. So that means ki, uh, like if you buy ATM option, you will get approximately half value, and whatever maybe the underlying increase, so half value will be there with you in case of ATM option. OTM options may, even if the underlying goes much higher, you won't be getting much premium in case of OTM option, especially for OTM option. In there you won't get much profits. Okay, so remember that the option is a derivative contract. It derives its value from its respective underlying. Hence it cannot move faster than the underlying. So delta can't be more than 1, obviously, because the option, particularly that option is dependent on the underlying. So underlying, whatever may be the movement in underlying, that will get reflected in the option only. Option cannot move faster than the underlying. So delta cannot be 1, more than 1. Okay. Now understand this key, we have different like strikes, ATM in the money, OTM, and different delta for them. You can see them this in the charts also. You can see this is ATM strike. Delta is approximately 0.5 k around. And then we have the in the money strikes for calls. Okay, these are the in the money strikes, and you can see how the delta is increasing from 0.6. It has increased up to 0.9 approximately. And for the OTM options, we have the delta decreasing in sequence. Okay. Similarly, for put options, these are all OTM put options, and we have the delta gets decreased, and ATM pay we have approximately minus 0.45 around delta, and then it gets decreased. And as you go deep in the money, the delta gets increased. So that is the idea. So that means ki if you are buying an ATM option, ATM ke round pay, you are buying any option, then you can expect half value of the moment. Okay. Now you have to understand that ki delta also changes when the spot value changes. Okay. Obviously, right now we are having this delta. Suppose Nifty is trading at around 21,700. Okay. So this ATM, this is the ATM strike. Nifty is trading at around 21,788. So 21,700, 21,750, these are all ATM option. Suppose it goes up to 22,000. So in that case, the ATM will change. And that ATM will shift from here to here. And all these values, they will also change accordingly. Okay. So the delta changes when the spot value changes. And if Nifty goes upwards, then also delta for all the strikes will change. If Nifty goes downside, then also the delta for all the strikes will change. Okay. And as the option transition from OTM to ATM to in the money, so does the delta. Okay, that's clear. And the thing is, how this delta changes, that is very useful. Okay, the discussion which we are going to have now, that will be very useful. That will give you the exact answer to which option to buy when you are correct with the direction, when you have confidence with your direction. So in that case, which option to buy and which option will give you maximum amount of money, that I'm going to discuss now. Okay. So we know that delta hits a value of 0.5 for ATM option. Now understand that there is a phase of delta pre-development. Okay. Delta pre-development, what is this? This is when the option transition from deep OTM to OTM. So when the option transitions from deep OTM to OTM, so the delta increases like this. Okay. Similarly, when delta takeoff and acceleration is the phase when the option transitions from OTM to ATM, and the increase is like this. Okay, this is an exponential increase. This is called delta takeoff and acceleration, this phase. Okay. This was delta pre-development. The slow increase was there in the delta. Okay. The index was increasing, or the underlying index, maybe index or maybe stock, that was increasing, but the delta itself was increasing very slowly. When the option transitions from OTM to ATM, at the time the delta takeoff and acceleration occurs, and the increase in the value of delta is much higher at the time. And then we have the phase of delta stabilization, okay, which occur when the option transitions from ATM to in the money to deep in the money. Okay, you can see when the option transitions from ATM to in the money and deep in the money. So again, we see the phase of delta stabilization. Okay, so we have delta pre-development, delta takeoff and acceleration, and then delta stabilization. All those four phases are here. And now okay, so understand that key, if you are very correct with the direction, okay, understand this. This is very important. Like if you are very correct with the direction, okay, this is very, because if you are not correct with the direction, then whole discussion will not be very useful. But if you are correct with the direction, suppose you are using OI data or price action, and you are very well versed with them, and you buy any option, है ना, you say that yeah, Nifty is going to go up tomorrow, so वहां पे you buy an option, so it makes sense that you buy slight OTM, okay, because slight OTM, when you are correct with the direction, suppose you are saying Nifty will go from here, and you buy, your option lies in between these two levels, so that means that particular option which is right now OTM, that will convert into ATM, and then in the money also, है ना. So if that happens, so we will see that this delta takeoff and acceleration phase occurring, so your increase in the profit will be exponential. Now you may be seeing this, like this is the whole crux behind the zero hero trades, है ना, why we choose OTM option in the zero hero trades. The reason is this only. The like at on the day of expiry at 3 p.m. everything has, like all other Greeks have fallen down. Like we have the theta has shown its effect, and IB has also cooled off. All those things are there, but only delta remains. Okay, at around 3 p.m. So वहाँ पे what happens at that time, you see that कि if like you are seeing any OTM option, and if a sharp move comes up in at 3 p.m., so that OTM will convert into in the money ATM, and it may also convert into in the money. So you can see that's why the reason is that the 5 rupees option can go up to 30, 40, 50, 60, 100 also. I have seen option go flying like this, because of the simple reason that this option, which was OTM right now, it was going to go zero in half an hour. Right, suddenly a move came, and this occurred. Delta pre-development occurred, then the A takeoff and acceleration occurred, and then stabilization also occurred. So even if this option, which was OTM right now, suppose there was an option which was OTM by 5 point, so it was trading at around 5 or 7 rupees, and Nifty goes up by 50, 60 points. So that means that this option will be going to be like in the money, and then it will increase by 50 points, 55 rupees. So you can see how much exponential growth is there in this particular option. So that's why, or not just in the expiry trading or zero hero trading, even in normal trading also, even in stock option also, if you are good with the like direction, again I'm telling you the direction should be right. It's not like if you are not good with the direction, then it can backfire also. But if you are right with the direction, you know that your study is good, you know that your data analysis is good, so wahan pe to benefit maximum from this thing, to benefit maximum from option buying, you should go with the slight OTM option. Okay, so that's the reason why when we are very certain that yeah, move is going to come, so wahan pe we buy a slight OTM option, and then the move comes and we make maximum amount of money. And one thing also I would like to discuss, that key the different option, usually you can say ki yaar ATM option is having delta of 0.5. Okay, so that means ki by a 10-point increase we'll be getting 5 rupees only. At the same time, the in the money option, they are having delta of let's say 0.8. That means ki by 10-point increase we'll be getting 8 rupees. So why not buy in the money only? Okay, so the reason is why you should not buy in the money every time is the reason for that is pretty simple. Like first of all, in the money options are like costly. Okay, ATM option have well priced. And secondly, this delta takeoff and acceleration, all those things will not occur in the money option. Okay, they are already stabilized. So the exponential increase will not be there. We are here to capture this exponential increase is very important for us. This thing we want to capture. Okay, so इसलिए try this, you know, when you start trading from tomorrow. So try this, see that. Okay, I am not saying कि just jump and start buying slight OTM options. See that if you are correct with the direction, how the option pricing behaves. Okay, you will see that yeah, in the money option they are not moving much, but OTM upslide or OTM option when they become ATM, the profit you will get increase exponentially. Okay, is it clear? Okay, guys. There is one question which is how do we take delta movement? Delta movement, how do we take delta movement means you have to take the trade, and you have to understand this. Whenever any option will change from OTM to ATM to in the money, the delta takeoff and acceleration will occur invariably. Okay, and in that case, you will be able to take make money from this scenario. Okay. Then there is one question which is Praveen is asking, yes, sir, where to see delta charts like that? Delta does not get represented in chart manner like this. And this chart I have made to explain you all. Okay, so this chart is not available anywhere, and you don't have to see also. Okay, because you have to understand the concept only. If it is in your mind, then you will be able to make money out of it. You don't have to see the chart. Okay. So moving on, if you have any more query, I will take. Vishal is asking one question, which is suppose 500 ATM premium goes upside, so my calculation of delta will increase from 50 to 60. No, no, no. If I think the question should be yes, yes, Alokji, I'll discuss that also. That later on someday. And today we have time crunch with us. Vishal is asking this question, which says, suppose 500 ATM premium goes upside, so my calculation of delta will increase from 50 to 60. Yes, yes, yes. That I was, yes, you are correct, Vishal. So that I was also telling that delta changes. Okay. So this is the change in delta also. From this graph, delta itself is changing. Delta was earlier it was lower side, then from 5.5 to 0.7, 0.8 like that, and then again stabilizes. Okay. Yes, yes. If sideways, we will lose premium, right? Yes, definitely. If market goes sideways, we'll lose premium. Um, Saurabh, your question will be answered in the discussion itself. Okay, so let's continue with the discussion, guys. I'll take your questions at last, because there are lots of like sides to this story. This is just one of the factors. Okay, based on just this only, you can't take the trade. There are two other Greeks also which are very important. Gamma is not that important, but IB like Vega is very important. And then we have Theta also. So okay, let's discuss them all. Then we'll culminate all those things. Okay, then after that everything will be more clear. Okay, so gamma, as I told you, gamma measures the rate of change of delta only. How the delta is going to change, that will be decided by the gamma only. Okay, so gamma is like second order derivative. Second order means ki delta is first order, so it derives its value from the underlying, and gamma derives its value from the delta. So gamma is not that important for us, है ना? And gamma captures the rate of change of delta. Obviously, it's important, but understanding this is not very necessary. If you understand delta, then all it's good. And gamma captures the rate of change of delta. It helps us get an answer for a question such as what is the expected value of delta for a given change in underlying. Okay, same thing. And gamma is always a positive number for both calls and puts. Obviously, है ना, because it is like an acceleration thing. है ना? Like you must have seen this in physics classes also. When you convert, like when you derive acceleration from velocity, it's always positive value. Okay, because it can increase only. Now we have theta. Theta is very important. Understanding theta is very necessary because all the options, ठीक है, be it call option, be it put option, all the options lose their value as the expiration approaches. The theta or time decay factor is the rate at which an option loses value as time passes. Okay, so both calls and put option lose their value, है ना? You can see the graph for this is like this. Time decays like this. When the time to expiration decreases, so the theta value, the premium value, option premium also decreases. Okay, so like this, you know, the options premium value will decrease like this. So the inference from this graph is कि जब when we reach near to the expiry, so वहाँ पे the decrease in value is uh, like much higher. The speed of decrease in the value is much higher when we uh, reach near to the expiry. Okay. So you can see all the options lose their value. There is one question ki, sir, why do ATM option? Like see, ATM option lose their value. So the thing is, okay, I'll be taking question at last, guys. I'll answer every question. Don't worry. I have answered to all of your questions. Just let me finish the discussion first, at least for the theta itself. So the thing is, theta not just like theta applies to all the options. Okay, all the options, whether it may be call option, put option, ATM, in the money, OTM, or every option will get affected by the theta. Okay, you can see theta in this graph itself, sorry, in this chart itself. We have theta for every option like this. Okay, then we have theta for all the options here also, both calls and put option. And the like we have theta in minus value. So the reason is like understand that when you are buying any option, so if you are buying any option, so you are having a limited risk. Now, whatever money you have put for buying that option, that is the only risk you are taking as an option buyer. But if you are an option seller, then you are having exponential risk because any option, suppose any option is trading at 100 rupees. So the minimum it can go is zero, but the maximum it can go is 1,000, 2,000, 5,000. There is no limit for going maximum. So theoretically, we have like the option sellers, they have unlimited risk, है ना? Because if somebody has sold this option, so that means कि if this option goes upside, so he'll be losing money. Similarly, if you have bought this option and it decreases in the value, then you will be losing money. Simple. So the option buyers have limited risk, so that's why option buying requires comparatively lesser capital, and this option selling requires higher capital. And to compensate for this risk and this higher risk the option sellers are taking, there is this concept of theta to compensate for this. The time value which is there, any option they have, like when we'll be discussing about the option basics. So wahan pe we have this discussion. There we see that every option has time value also, and that time value gets decreased as the option approaches the expiry. So this time value is the component which is given as the compensation to the option sellers. That's why you must have seen there are so many option sellers who are like delta neutral, है ना? Because they manage the delta because delta is the additive in nature. Suppose you buy an ATM call option and at the same time you are buying ATM put option. So if you are buying both of the option, that means the delta is neutral. And ATM option is having like a call option is having zero point 0.5 delta, put option is having minus zero point 0.5 delta. So a delta will become zero. So that is called delta neutral. But at the same time, theta will be there. Theta decay will occur for both call and put option. So the option seller will get benefited if the market remains sideways and the time decay occurs. But at the same time, this delta takeoff and acceleration, this concept is purely beneficial for the option buyers. Okay, option sellers have some advantage and option buyers have some advantage. So the discussion that whether option buying is good or option selling is good, that should not be there. Everything is good. All the concepts are there to make money. Okay, all the methods are there to make money. Do whatever you are good at. If you are good at option buying, do that. If you're good at option selling, do that. No, but understand the nuances of these two. Understand the nuances of whatever method you are taking, and then only take that. Okay, understand very clearly. Now the thing is, so we are discussing that. Is my connection unstable, guys? Is my voice clear or not? Screen approach. Give me 1 second. Is my voice clear now, guys? I think it will be clear now. Okay. So I was telling, I was discussing about this option buying and selling thing. That's clear. Okay. So both are good. The option selling is also good. Option buying is also good. The thing is what you are good at. Okay. If you are good at option buying, do that. Good at selling, do that. Okay. But understand everything very clearly. If you are suppose you are buying any option, then you should understand how the theta works and how it will work against you. Okay. So all the options, both call and put option, lose their value, and because of this only, है ना, to this losing value is because of this losing in the premium is because of this theta only. Okay. So if you exclude all other Greeks, options lose money continuously owing to theta. Option sellers focus on theta. On the day of expiry, theta decay is very high and plays a crucial role in deciding the strike to buy. Okay. Here, like on the day of expiry, you have to take extreme care of theta. Okay, many times this happens that if you even if you are correct with the direction, if you are right with the direction, everything is okay. Still, you bought wrong option, and because of theta, you lost your money instead of gaining one. Okay, so that is and there is one question from one of you that whether the Greeks or whether the theta they are applicable for intraday. Yes, definitely they are applicable for intraday trading also. In fact, they are like very powerful in intraday trading also, है ना? Because especially on the day of expiry. Other days pay the effect is comparatively lesser, but on the day of expiry, the effect is higher. So that is one of the reason now because of theta only. Theta pay only thing is that you have to understand, and theta only decays. Okay, because of time, you will never any option will never increase in premium. The reason is pretty simple because time runs in only single direction. Time runs only forward and never comes back. So the theta decay is always happening. Okay, and the graph is like this. So the idea is, as an option buyer, you should be in the trade for as lesser time as possible. Okay, you should be in the trade. Like you have to see the markets, keep watching the markets, keep watching the charts, keep seeing the data. But the actual trade which is going to happen, that should be of a much lesser time interval, so that the theta decay does not takes much effect and you make higher money. Okay, and now let's discuss. Ashish is asking one question, which is, sir, is there any calculation on how fast theta decays, especially on the day of expiry? Or does it depend on the time left plus movement of index or just time? Just time. Ashish, theta is concerned with just time only, no other thing. Okay. Theta, the graph will be same for all the call options, put options, and whether there was volatility or not, whether there was any sharp move or not, the graph will be same as far as theta is concerned. But the premium, the option premium, that will be dependent on a lot of other things. Okay, especially IV. Okay, so the second part of your question, which says that does it depends on the moment of index? So the moment of index will be covered in the IV. Okay, Vega, which we are going to discuss just now. Okay, any more question regarding theta? Most welcome, Ashish. Vishal is asking one question, sir. Most of the time, people give target like 50, 80, 90, and stop loss like 35. How they calculate? So that's a totally different discussion, Vishal. That we'll do some other day, because a lot of other factors are there, especially OI data is needed. है ना? When you want to set target, so open interest data, the OI means open interest data, that is needed, and that's a totally different discussion. Okay. In the option Greek data on the, yes, yes, there is one question, that is key, how theta affects each strikes differently. What does it mean for an option buyer? As an option buyer, we are concerned about the strikes selection from the point of view of Vega and delta only. Okay, because theta is something that if you go saving theta, if you go to OTM, it will not be very useful for us, because the third Greek which we are going to discuss, the Vega, that is the most powerful of all, and that will have to consider. Okay, so as an option buyer, we stick to ATM or slight OTM or slight in the money uh, from the perspective of delta and IV only. Okay, theta value, yeah, I know that theta goes from your question is right, your observation is right, but the thing is, based on that, we can't take the decision for this. Okay. Similarly, option sellers also, they have, like the option sellers, they prefer to sell OTM options. Okay, usually especially the non-directional traders, and which are trading with big capital, they try to sell OTM options. The reason is because they have to take care of IV as well as delta. Okay, delta they will not utilize, but IV should be there, है ना? So ATM options पे IV is very high, and sorry, IV change and effect of this is very high. The gamma thing, so not delta, the Vega thing is very high, and that affects it all. It's okay, not IV. The Vega affects ATM option a lot. So that's why the option sellers, they go with the OTM options. Okay. Yeah. That's what I am telling Sridharanji, that if you are selling options now, the sideways market pay, you can bet on this thing, you can sell ATM options. वहाँ पे आपको premium will be very higher, but at the same time the risk will be very higher, because the Vega thing which we are going to discuss now, that will spoil your trade. and a Vega will change. It will definitely affect your trades. So that if you want to go, that's why if you are very conservative in nature, then go for OTM option. If you are very risky, then you can go for ATM option. Okay, so it's safe that you can go for ATM option. Yes, there is one suggestion that let's take question in the end. Yeah, I think we should do that because once I discussed about the Vega, so I will lot of your questions will be answered itself. Okay, I'll take all the questions, guys. Don't worry. I'll be here till you guys every query of yours is cleared. Okay, so I'll be here. But let's discuss the things which we have to discuss first. Okay, so we have Vega, and before discussing Vega, let's discuss about the volatility. So volatility is something like this increases before any event like election result, monetary policy, RBI meeting, stock result. If even like whatever kind of event is going to happen in the country, which is going to like country or that stock or our markets, anything that can affect the movement of the stocks or then the indices, because index are nothing but the derivatives from the stocks only. So indices and the stocks, if they get affected from any movement or any news or anything, so that increases the volatility. Okay. So when volatility is increasing, option buyers are benefited because if volatility is increasing, so all the option prices will increase. Okay. And let me tell you, with increase in volatility, the premium will increase, and with volatility decreases, the premium will decrease. Okay, we'll discuss it in a while. So volatility decreases sharply after the event. One thing is like suppose any event is there, monetary like budget is, especially it happens on the budget day, and any other anything like so budget day pay. What happens when the budget starts to like when our finance minister starts to read out the budget. So you on that day the option premium starts to decline like this. Okay, both call and put option. Okay, Vega movement is there like sorry delta movement is there, but Vega because of volatility always decreases after the budget or even after the result of any stock. Okay, before the declaration of the result of any stock, the volatility increases, and after declaration of that result, volatility decreases. Similarly, budget may be also, and that's why after declaration of the budget, option buying can be harmful. I'm using the word can because if because of budget some announcement is there and the delta movement is very sharp, है ना? Because the directional movement is very sharp. Suppose market falls in a single direction or market goes up in a single direction. So वहाँ पे the delta will increase for calls. So that delta will take care of the premium and the option premium will increase. But if the sharp movement is not there, then after any event, be it budget or any policy, RBI policy or anything, the IV will decrease. Okay, the volatility will decrease. Okay, and the option premiums will decrease. Both call and put options premium will decrease. Okay, so what is IV? Okay, I have used the word IV 2-3 times in previous slides. So let's understand what is IV. IV is the implied volatility, which represents the market participants' expectation on volatility. Market participants means we are the buyer, the seller, the big institutional players, everybody who are related to the market. So what they are thinking that about any event, suppose any RBI policies to come. So we are thinking about that. We are making our position according to that. We are taking position and all. So that that volatility is implied in form of implied volatility. Okay. So implied volatility can be thought of as a consensus volatility arrived amongst all the market participants with respect to the expected amount of underlying price fluctuation over the remaining life of an option. So that means that it will depend on the what we are expecting the fluctuation to be. And our expectation is shown in form of IV. Okay, the actual volatility is different thing, but IV is something because the expectation is all that is the main factor, because we have another volatility also, which is called historical volatility, HV. That is depend on the, like, when the same event occurred last year or before that for any stock. So what was the volatility at the time? Suppose last quarter may, when the result declared, so wahan pe what was the volatility? So that will be seen in form of historical volatility. Okay. And the implied volatility IV is reflected in the price of the premium. Okay. So IV is something which affects the price of premium very badly. है ना? मतलब badly means very highly. You, if the IV is high, then the option premium will increase in value. If IV is decreases, तो वहाँ पे premiums will decrease. So the rate of change of option premium according to changes implied volatility in change in implied volatility is denoted by the Vega. You can see this is the graph. Okay, this graph is of the fall of COVID. Okay, during the fall of COVID of Nifty, this is Nifty's graph. So the black line denotes the price and the green line denotes the IV. So you can see how the IV increased, how the implied volatility increase like this. Okay, everybody was fearful, everybody was scared, so the IV was increasing like anything, and after that when the things started to become normal, IV started to decrease like this. Okay, so this is the relation of IV with price. Whenever any sharp movement is there, whenever market is fearful and all, so वहां पे IV increases, है ना? This is also this is also a graph of IV and price of a Bank Nifty this last week. So you can see this IV, yellow line is IV. You can see morning pay IV is very high. When the market opens, IV usually is very high every day because the volatility is very high during morning hours. So वहाँ पे IV is very high and eventually it decreases. And throughout the day when the Bank Nifty was stable, IV was going down and down and down. And then again, after sharp movement, volatility increases. Otherwise, IV keeps going down. Okay. So this chart is available from iCharts, and you can see it. This is iCharts feature is that also कि वहाँ पे historical charts are available. So you can see that there. And our next slide comes, which answers one of you guys' questions also, India VIX. So India VIX is the official implied volatility index of our country. Okay. So India VIX is computed based on the mathematical formula. And the formula is like this only. Okay. We don't have to go to the nitty-gritties of this formula. This slide is just to show you that there is a proper complex calculation behind this India VIX. And a lot of factors are there which affect the India VIX. And India VIX indicates the investors' perception of the market's volatility in the near term. Okay, depicts the expected market volatility over the next 30 calendar days, how the market is going to behave. And a higher the India VIX value, higher the expected volatility, and vice versa. So that's why you must have seen that a lot of people are saying that when the VIX value increases, option buyers get benefited, and when the VIX value decreases, at the time option sellers are benefited. So that's very general statement. It's not like if the VIX is high, the option buyers will automatically get benefited. You will have to be correct with the direction also, and a delta will also take part. But at the same time, when the VIX decreases, so वहाँ पे option sellers will take benefit, because option sellers, they neutralize delta, so they will take benefit of this. But as an option buyer, if you are correct with the direction, and I'm repeating this again and again because you have to be correct with the direction. The OI should be correct, and the OI gives you the value, the actual direction, how the market is going to behave. There is a proper concept and understanding behind this. So that gives you the direction, and if you are correct with that direction, then obviously you will be making very huge money when the volatility increases, when the India VIX increases. Even if India VIX is low, still at the time delta will take its shape. Na? Delta will be there, movement will be there, and because of that, you will be able to make money. Okay. So here we have, when the markets are highly volatile, markets tend to move steeply, and during such time, the volatility index tends to rise. And volatility index declines when the market becomes less volatile. Volatility index such as India VIX are sometimes also referred as fear index. As I told you, when the fear amongst the trader rises, so obviously volatility will increase, and so the VIX will increase. You can see during COVID time, a lot of fear was there around the amongst the market participants, that market can go to 0, 5,000, 8, 6,000 like that. So a lot of fear was there, and because of that, VIX was through the roof. Okay, so here we have this graph which tells you the call option premium versus volatility. So here you can see day to expire 30, 15, 5. So that means that this line, this is like a lot of time is remaining for the expiry, some lesser time and very less time. So you can see the premium value when the volatility increases now. So the premium increases much higher if the time remaining is high, very high. So the reason is because theta decay will be higher for these. Okay? If the lesser time is remaining to expire, so theta decay will be high. And if much time is there remaining, तो वहां पे theta decay will be less. So theta will affect, and at the same time vega will also affect lesser to the options which are near to the expiry. Okay, so इसलिए the culmination will discuss now, which is that ki option prices are decided by the interaction of all the Greeks. ठीक है, a lot of Greeks are there, but mainly these three Greeks. And being right in the direction delta is just one part of option buying. We need to consider other Greeks too. For example, deep OTM call options have negligible delta. This is very interesting option example, guys. So deep OTM call options have very negligible delta. But if Vega increases significantly, their premium may increase despite of market falling. ठीक है, market falling, that means कि call options should lose their value. But in case of deep OTM call option, we have very less effect of delta. So they are not going down very easily. But if market falls suddenly, so that means कि Vega can increase so high that they may, paradoxically, they can increase in the value also. This can also happen. This has happened few times. This is not very common phenomena, but it can occur. So that's the example here is to tell you that ki, yeah, Greeks have their effect and they can affect in a different manner. So the profit, this slide will give you the smooth conclusion that profitable scenario for option buyers occur when the delta is increasing. Okay, gamma in favor, obviously delta increasing, that means ki gamma will be in our favor, and Vega increases and theta decay less. Okay, if the delta is increasing, gamma is in your favor, and Vega is also increasing. Vega means volatility. That means ki sharp movement should be there. As sharp movement will be, as sharp the movement will be, so the profit will also increase like that. And then theta decay less. Theta decay less means ki you have to remain in the trade for lesser time. So that that's why the reason is that ki whenever you are buying any option na, to wahan pe you have to go do the option buying when the volatility is much higher. That's why always option buying pe you must have seen that ki I give my opinion in the first up to 11:30 only, and after that I come after 1:30 only. In between we don't have much insight is there, because no need to do effort. वहां पे क्या होगा, because the IV is like Vega will not increase much because the momentum is not there, है ना, market remains sideways only. Movement भी आएगा तो not very sharp movement is not there, तो वहां पे we usually don't get this Vega part, and theta decay occurs much higher. So that's why the as an option buyer, market opening time, closing time, they are more important for us. Similarly, yes, so I was telling you, similarly, delta should be in your favor. As an option buyer, delta to correct होना ही चाहिए, then only we will be making money. And gamma and Vega है ना, momentum increase हो रहा है तब आप, then only you have to buy. Okay, so momentum increase will occur when when you are good with the price action, when you are good with the wide data reading, then you will be able to spot these times when the Vega is going to increase, and you can make your position, and theta decay should be less. To avoid the theta decay, time exposure should be as low as possible, and make the profit and book profits as early as possible. And at the same time, you have to remain in the trade to do that. So that's why I tell you always key book half profits when you have a sizable profits now. So you can book half your quantity and you can trail stop losses in the rest of the quantity. So that if further movement comes up, further fall is there, then you can make more money. And buy only when the momentum is going to increase. Okay, that I have already discussed. See UI data, see price action, and buy only when the momentum is going to increase. Look for exit when the momentum fizzle. If huge momentum is not there, market is fizzling like this, so happy you can look for exit. You can enter again later on also, but if the momentum fizzles down, then look for exits. Then we have some tips for monthly option buying. If you are buying any option which is monthly like stocks, तो वहाँ पे buy a slight OTM and make them ATM in the first 2 weeks. Make them what ATM means कि hold them till they are ATM in the first 2 weeks. And similarly, in last 2 weeks, you have to buy ATM. Last 2 weeks means कि second last week basically. Last week पे तो you don't have to buy options of that month, है ना? There is a proper discussion for that, which we'll do some other time. So last week पे don't buy option of that month. Okay, next month you can buy. And for weekly option buying, all over the week, you can buy slight OTM and even ATM also if you're not very certain that yeah it is going to take off like this. So वहाँ पे you can buy with ATM. On the day of expiry, go with in the money. ठीक है, and at 8 p.m. again you can go with ATM in the money or even slight OTM also depending on your analysis and the OI data what you are seeing at that time. Okay. And then we have profitable scenario for option sellers also. Vega decreases, theta decays more. And mostly they neutralize delta. They sell both puts and calls. So they don't fear that. But at the same time, Vega decreases. It's not like Vega decreases always. And Vega can increase also. So you may have seen a lot of option sellers posting in Twitter like we got injection today. We got Vega injection. So that's because of that only. Vega sharp move was there. And because of that sharp move, all their profits was gone and they were in deep losses. So because of this Vega on also. And so that's why you have to understand your game correctly. Option buyer can also make good money. Option seller can also make good money, but you have to understand your game correctly and how the Greeks are behaving. That affects a lot in that game. Okay, to capture theta decay, the exposure should be more as possible for option sellers, and time runs unit actually. So theta decay is always happening for option sellers. Okay. So I think that's clear. Okay. The main takeaway point was, I think, delta takeoff and acceleration and how to see this IV thing. A lot of sources are there to see the IV and all. But understand that how the picture should be clear in your mind. Okay. So that will give you more clarity. Okay. Now I'll be taking your questions, guys. You can ask me question related to this topic. I'll be taking a few more sessions also. I'm planning to take sessions regularly whenever my time permits. So other topics will be discussed later on. So let's take your questions. If you want to say something, you can say. Now there is one question. Vishal is saying, is it possible that seller make fake deep OTM position to manipulate? Yeah, there are a lot of things that sellers do. The big sellers, the institutional sellers, they do a lot of things to manipulate the markets. Okay, and the question which you are asking is correct, and that is also one of their game. Most welcome, Saurabh. How do we calculate the premium value of an OTM strike on the basis of theta? So, as I told you, the premium of any strike, be it OTM, ATM in the money, depends on a lot of factors. Theta is there, IB is there, theta Vega is there, and delta is there. A lot of other factors are there, and the proper formula is there. Okay, the formula is available in internet, but we do not need to calculate that for us. Okay. Ashish is asking one question, sir. How do you decide where index is going to expire on day of expiry? Is it based on Greeks or how Y buildup is there? Based on OI data, Ashish. Okay, based on the OI data, around 230 to 40, we get the clarity, yeah, that yeah, the option is going to expire at this range, and how it goes there and all. That's a proper OI data reading part. Is OI data being less significant as retailers are also becoming sellers nowadays? No, Ajmal, that's not the case. Because retailers are sellers from a lot of like lots of years. It's not necessary that they are becoming sellers now. But the thing is that key they don't plan their selling. Okay? They come into the market and they are here to take IV and some direction also. But they don't have the muscle power. Muscle power means the money to manipulate the markets. They can make their position, but the position which the big institutional sellers, the operators, they make, they firstly they make a position in stocks, then in the industry that is much higher in the value. Okay, I'll show you the max spin someday, so that will be very eye opening for everybody. So you'll see how big a position is riding in every strike. Okay, I'll discuss about max pain in one of my discussions. Sir, while taking trade, it is so tough to keep all the Greeks in mind. Any solution? Practice, Vishal. Day-to-day practice. When you keep thinking about different scenarios, different strikes, you whenever you are trading. So from tomorrow onwards, whenever you are trading, so you see ATM also, you see OTM also, you see in the money also, and then once you see the fluctuation in prices of all these strikes, you will understand how the Greeks are affecting them. So that will be very clear to you. Okay, it will take time, but it will clear. How do we decide which option is better for us as an option buyer? Abhi is asking this. So I have given you the simple answer, Abhi, in this slide itself. Uh, for weekly option buying, we have this slide. This slide will help you. Okay. Okay. So I think I have answered all your queries, guys. Okay. Thank you. Thank you, Ashish. Thank you. Definitely. Thank you. Thank you so much, guys. Thank you, everyone. I will take sessions whenever I find time. Okay, whenever it's possible and whenever any demand is there from you guys, I will take sessions regularly. And I like discussing with you all. So I'll do this more often. Okay. There's one query regarding Vishali Singh, sir, please plan complete paid session. So that will also come in due time, Vishal. I'll inform in the channel only. Okay. Yes, Ajmal, I have one. I will inform regarding that in few days in the channel. Okay. Thank you, guys. Thank you so much for joining. Yes, result-based trade will also be covered in that in due time. Sure. I'll discuss a lot of other things with you all, guys. Thank you so much for joining. Let's end the session now. Thank you. You have been a great audience. And let's end the session now. Okay. Enjoy your night and have a very profitable day of trading tomorrow. Thank you. Good night, guys.